Now that the election is over, we turn our sights on the channel to what this all means for you. There were a lot of promises made on the trail, specifically around taxes on things like Social Security, tips, and a variety of other elements that are important to the American people, and we're going to break those down here right now. The House and the Senate both need over 50% to pass a bill into law. Now, practically speaking, the Senate actually needs 60% because of something called a filibuster. And so we're going to assume that with 53 representatives for the GOP in the Senate, that they're going to use something called reconciliation to get through the agenda that they have in front of them. The government can use reconciliation 3 times a year to pass legislation, one for each of 3 different categories. So what that means here is in this category, they have 1 opportunity per fiscal year to pass legislation. First off, the TCJA, or the Tax Cuts and Jobs Act that was passed in late 2017, will very likely come back and get approved again. The one element that may change is the state income tax and property tax on your mortgage. The 2 combined were capped at $10,000. Trump did say at one campaign stop that he was going to repeal the SALT limitation. We'll see if that materializes because it was said one time and one time only as far as I'm aware. All right, let's talk about what's new though. The first is no tax on tips. This was a battle cry for both the Republicans and the Democrats, and I think it's very likely that this is going to make its way through the system. The one caveat to this is the definition of tips has not been, defined. Most people think that tips are the things that you give at restaurants, valet service, when you check your bag at the airport, etc. But you could see a scenario where a year-end bonus could be a tip from the employer to the employee. I think this is unlikely because there will probably be a provision on no tax on tips that says that the payer of the tip can't then deduct it as compensation to an employee or a third party. Next is no tax on Social Security. Now this is a throwback to 1983 where Social Security wasn't taxed. And then in 1983, beginning in 1984, up to 50% of your Social Security payment was in fact taxed. Now, the rationale at the time was that you paid for half of your FICA payment and your employer paid for the other half of your FICA payment, and your employer had a tax deduction, whereas you didn't. So 50% of that payment got a tax benefit. That was all thrown out the window in 1993 when the Clinton administration raised the tax maximum from 50% up to 85% of your Social Security payment. The problem with both was that when the thresholds were put in place, it was very likely that someone wouldn't actually pay the tax because of the amount that they would be earning. But as time passed and the thresholds didn't go up, the amount of people that actually pay tax on their Social Security has become a much larger number than 1983 and 1993. The next element is no tax on overtime pay. This is one I think is a little less likely because it's frankly harder to justify than either Social Security or tips. And by the way, the reason that tips might be an easier sell is simply because a lot of the times tips aren't reported anyway, whereas the overtime pay is definitely reported. The implication is that the administration wants people working. They want them working more in the U.S. They don't want to outsource labor. And so by encouraging the employee to work overtime without having tax, well, you're effectively allowing that to materialize. Whether this one gets through or not, I think it's TBD, frankly, because it is one that came in later in the campaign. And frankly, it doesn't have the same rationale that you could build anyway for no tax on tips or no tax on Social Security. No tax on tips, the rationale is that a lot of tips aren't reported anyway, and no tax on Social Security means that we're just going back to the way that things were. And frankly, if there's a problem with this one, it's more likely to be at the House of Representatives level than the Senate level, simply because it's just much tighter in the House. So what does this all mean? Well, if one member of the House of Representatives doesn't like the provisions that are being put through, they can ask for a motion to vacate the chair. It can come from either side, but it will only be supported if you can get the majority to say yes to the vote to vacate the chair. The next provision is to eliminate tax on Americans living abroad. Now, this one is interesting because most countries don't tax their citizens if they're not living in the country, but the U.S. is rare in the fact that it still does. There are tax treaties that help mitigate this a bit, and so if you're paying tax in one country, it's an offset in another, often anyway. But the problem is simply that you're getting the worst of the two outcomes. And while tax treaties and the foreign earned income exclusion help mitigate the problem, there are certain things like investment income and self-employment income that are not part of the test. It also requires some pretty complex and expensive tax preparation, and this is something that a lot of people just don't like paying, of course. And there's also a belief that this encourages economic opportunity, frankly, because when someone's living abroad, they serve as a quasi-ambassador for the country and create trade between the two countries. And finally, President Trump said that he would think about eliminating tax for the military and first responders. It doesn't sound like it's likely, but certainly you never know until you see something come across the desk of the president. One thing's for sure, 2025 is going to be a very interesting year. If you like this video, check out that video on how to eliminate tax on Social Security. Also, don't forget to click subscribe and turn on notifications so that you get alerted the next time I post a video. There's a lot going on, as you can imagine, and we work very hard to get what's out there in here for you. This is Jeff Schmidt. I'll see you on the next video.
Holy Schmidt!